If you're a home gamer, what should you be watching right now? Of course, the Dow, major swings this week, down 700, up 400. What's next? Should you care? Jim Cramer, welcome to the show.
Well, you have to care about the Dow because what happened is that if it weren't for the down 777, the loan package would be, and I refuse to call it a bailout because I don't know who they're bailing out, frankly. They're certainly not bailing out Wachovia or Washington Mutual. But the loan package is deeply ingrained in a notion of systemic risk. If you can take systemic risk off the table, you're going to come back and look at traditional things like the VIX. VIX is an index that basically says whether people are too scared or not. We're at a level where 4 out of 5 times it's produced a market bottom. The 5th time was 2001, and we got no bottom, but the odds favor if you have a situation where 4 out of 5 are good. I sit up and take notice. Another thing that we had, and I bumped into my old friend Justin Mamus, who was Helene Meisler, our fabulous technician at RealMoney.com, who was her tutor, and also I learned a great deal from. And he's pointed out something that I've really forgotten to look at that the home gamer should be focused on. If you look at common stocks, one of the things he likes to look at is new highs, new lows. Interesting enough that on the down 777 day, we did not have more new lows than the last few times that we visited these very viciously down markets. Now, that's a reason why I mentioned is that's not a Dow indicator. That's an indicator of all stocks. And we have the fact that we had fewer lows, again, is the sign that we could be putting in a bottom. Now, all we're looking for is a bottom here. The news is really horrible. It's also being twisted in a way by short sellers. I know that people say, well, short sellers are getting overly blamed. Look, I mean, when hedge funds took over the world, if you're not shorting it as a hedge fund, well, then you're not going to be in the game. So, I mean, the shorts have a lot of power here, and I think that they've become the allocators of capital, and they also have what seems to be truth on their side. I say seems to be because, is mark-to-market good or bad? Well, the goal is to not wipe out as many institutions as possible. But if you can take off the wiping out of every bank other than J.P. Morgan, and you return to a degree of credit normalcy, then what people will look at is things like VIX, and they'll look at new lows and how many are, and they'll realize that maybe there's some values.
All right, thanks very much, Jim Cramer. That's for you, home gamers. Stay tuned for more Wall Street Confidential.